And if everything works, the recording is on. I will hide the video panel, the floating meeting controls, and the recording is on. And welcome everyone. It's Marcel here. And as I said at the beginning of this session, or before the recording has been started, in this session, we will do a recap about the trade activity yesterday. I will tell you a code, and I want you to listen to that code, and I want you to listen to my thoughts. And after that, we will create a forecast about the 4-hour chart, the 15-minute chart, the 5-minute, and the 1-minute chart. So we'll do the usual breakdown of the overall chart. Okay, so let me just tell you that code. It's actually pretty awesome. Just listen to this. If we only love the fruit, we may not be willing to take care of the tree. But if we love to take care of the tree, we will most definitely reap the fruit. Just think about it. Just think about what does this mean. It means that you have to love the progress, right? In this situation, the fruit is the money in Forex. The fruit is the money. And the tree is just a strategy. Tree is the overall Forex. And you have to love Forex in order to make money. Because if you only chase the fruit, you only chase the money, you will never see that money. Because if you only care about the money, you only care about the fruit, and not to take care about the tree, the actual Forex, the actual progress, you will never see that money, you will never see that fruit. And this is so true because I was talking about this for like 3 months now, and I'm saying this code to you every single day. I will say this to you every single day. I will just actually pin it in the Discord group. I will create a whole channel for this one single code, and I will pin this single message in that channel. Because just realize, just think about it. What does it actually mean? That I saw that lots of you guys are chasing the actual money, and you are only chasing the challenges. You are only chasing to pass the, I don't know, FTMO, My Forex Funds, True Forex Fund Challenge, any kind of challenge. You're only chasing those challenges because you like to make money. You're saying that, okay, by the end of this year, this 2022, I'd like to see some money out of the Forex. And I heard lots of you guys that are saying this, and you're always saying that, okay, by the end of the year, I'd like to make money. By, I don't know, July, by August, I will make money. Next month, I will complete the challenge and I will make money of the challenge. This isn't the right attitude. You have to think about the actual tree. Tree in this case is the Forex. You have to think about the Forex, the long game, the enjoyment of the progress, because this is a whole lot of progress, step-by-step game. You have to build the confidence, you have to build the skill, you have to build everything in order to actually harvest the fruit. And the fruit is the money, right? So you have to take care of the progress. You have to enjoy the progress, because if you enjoy to grow up a tree, if you enjoy watering a tree every day or just taking care of the tree will actually reward you with lots of fruits. If you take good care of that tree, if you take care of the tree every single day, if you take care of the Forex every single day, it will actually reward you with lots of fruits, with lots of money. But this is a step-by-step game. This is a long-term game. A tree isn't grown by a day, right? It can be grown by a day. It's not like that you plant a tree and by the next day you're going to harvest the tree. It's not like this. It's not like in the Forex game too. It's not like that you start, for example, a video course, my video course, and you think that tomorrow I will make money out of this, or next month I will actually complete the challenge and make money out of this game. No, it's like a tree situation. You have to grow that tree. And as soon as your tree has been grown, it will produce fruits for you. It will produce money for you. And I just fell in love with this code. Actually, it's so fucking good. I just fell in love with this code because I was looking for this to tell you guys about it. And it's so great. Just actually print it and put it on your wall. Every single one of you just print it and put it on your wall. This code. I will send you this code and you have to print it and put it on your wall. Everyone who puts it on their wall will get an extra point for someone. I don't know, but please just do it. Just send me a picture about this code on your wall. Okay. That's enough about it, I believe. Let me just drink a sip. And let me just read the chat. Yeah, okay. So let's just start the breakdown of the trade from yesterday. Okay, now we replay it. It will be much cleaner if I replay it. Here was the end of this session. Okay, I just started on a 15-minute chart. Are you guys all here? Ready to see the recap video or the recap webinar?
Yep.
Just drawing my screen. Okay, perfect. So you're here and you're ready. Let's just start the recap. On the 15-minute chart, if you haven't seen the markups from yesterday, please just check those markups because those are important to actually understand this recap. If you haven't seen those, I'm sorry for you. We will start this recap without you. We won't wait for you to actually check those markups. You will have to check it after the webinar. I don't know who drew this red line here or green line here. Just remove it, please. Thank you. Okay, so 15-minute chart. The session open was somewhere around here. Yeah, this was the session open. But we have to talk about what has happened before the session. This was before the session movement. This was the London session. This was the Asian session, etc., etc. So what can we see? I've pre-marked this zone on Monday. I've already sent you this zone on Monday, and it's a pretty valuable zone. We have to take care of this zone. We can expect a reaction on this zone because it had lots of liquidity just below it. So basically, this was a 4-hour zone. This was a refined 4-hour zone on the 15-minute chart. As you can see, the 4. These guys, mute yourselves. If you're not speaking, just mute yourselves. Okay, so this was a refined 4-hour zone. As you can see, basically, this is the whole zone. This is the whole 4-hour zone. And no, in this case, I wouldn't use the weak refinement because it's so small to be a zone. This is so small to be a zone, but it's actually the 15-minute refinement. So in this case, I will use the whole bullish candle in this case as the 4-hour zone. I will use this as the whole 4-hour zone. And in this 4-hour zone, we have a refinement, right? So here was the refinement of the zone, and here's the full 4-hour zone. Okay, what can we see here? We can see that price was coming in a downtrend, building up loads of liquidity, right? Building up loads of liquidity for maybe the upcoming shorts for a supply zone. So that was liquidity. What has happened after this? Price has stepped into a daily demand zone. This was a daily demand zone that I've shown you on the markers chart. This is a sorry. This is a daily demand zone that price has just mitigated recently, the day before yesterday. Okay, after this, a reversal to the upside has happened. As you can see, here was a mitigation. Price couldn't break below this mitigation point right here. It couldn't break below, it just weak below. And after the week below, it was the first sign of the weakness of the bear trend, bear run, and just reversed to the upside and created a change of character. Actually, the change of character will be here or here. But price has created a change of character to the upside, right? But this movement could have been also just a liquidity sweeping movement and not a character changing movement, because as you can see, this is a whole lot of liquidity line. This is loads of liquidity right here, sitting just below the supply zone. And this liquidity has been built up for the supply zone. I mean, I know this is the 15-minute chart, but just think about it. If, for example, this scenario is on your 1-minute chart, you will 100% consider this as liquidity, right? And just always think about the higher time frame like the 1 minute, or always think about the 1 minute like the higher time frame. If you see something like this on the 1-minute chart, so price is creating huge inefficient movements to the downside, following a huge bear trend. And just imagine that it's a 1-minute chart. This isn't a 15-minute chart right now. Just imagine that it's a 1-minute chart. So if price is creating something like this on the 1-minute chart over and over again, and for example, creates a pullback right here, hesitates here, we are right here at this region, hesitates here, creates another inefficient movement to the downside, breaks structure, and hesitates another time, creates another break of structure to the downside here, and creates liquidity, lots of liquidity for the inefficient zone that has created the last recent break of structure here. And there will be the zone that has created the break of structure. And for example, this was a flip zone too. This has flipped the demand. So just imagine if it was a 1-minute chart and this supply zone that I'm just marking could have flipped the demand zone here, you will title it as a flip zone, right? And if it will have liquidity just below it, like a liquidity trend line and a huge liquidity trend line like here, you will just simply set a limit order on this zone without any doubt, right? Without any doubt, you will set a limit order on this zone. Even if there was a demand tap, you will simply set a limit order here because price is following an extremely bad trend. Price is following an extremely bad trend, and you are expecting the demand breaks over the supplies, right? So you're expecting the demand break and not the supply break, because this is what price is doing. Tapping into demand zones, breaking below demand zones, tapping into demand zones, breaking below demand zones, tapping, breaking, tapping, breaking. This is what price is doing. So if there's one more demand zone, sorry, if there's one more demand zone and price is just reversing on this demand zone, you will actually notice that price has a huge potential to break below this demand zone once again. Why? Because there's a less recent valuable supply zone. You can expect a reaction on this supply zone. There's liquidity just below this supply zone, and price gives reactions on these demand zones. So price always gives a small reaction, and these reactions are opportunities to enter. These reactions on the demand zones are opportunities to enter on the supply zone and continue the main trend. Here, price will retrace after a demand tap. Demand tap, tap into a supply zone, another breakout structure. Demand tap, retracement, supply zone, another breakout structure. And this was the exact same scenario, but with liquidity. So there was a liquidity. So once again, if it would have been a 1 minute chart, if this would have been a 1 minute chart, you will take this setup without any doubt, right? Just I'm asking your opinion. Would you take this setup on the 1 minute chart? Yes or no? Just let me know. Yes, exactly. You will take it because it's a fucking godlike setup. It's a godlike setup. Of course, I will remove this. Wait a minute. Thank you for your drawings and your opinions. So of course you will take it because it's a godlike setup. We can't argue. Let me just remove all of this. Sorry. So if you're aware of the main trend, you know that the main trend is extremely bearish, following a supply over and over again, supply taps, demand breaks, supply tap, demand breaks. Then why will you count on a demand continuation? Then why will you confuse yourself with demand trades, even if it's a bigger time frame, even if it's a 50-minute, even if it's a 4-hour? Why would you confuse yourself with the demand trades when you know that the trend is extremely bearish and you can expect supply reactions over demand reactions, and you can expect the short continuations over the long continuations? So why would you do this with yourself? That's why I'm always saying that all of the time frames are fractal. All of these time frames are fractal. All of these time frames are correlated. You can see the exact same pattern on the 1 minute chart as on the daily chart. You will see the exact same pattern, right? So what has happened here? Price is coming down, created a liquidity line for the supply zone that has created the less recent breakout structure or flip zone right here. Price is coming down, and after this, it has mitigated the supply zone. Here was a supply mitigation, right? It's a double-sided edge. I mean, double-sided knife, because this is a supply mitigation. Perfect supply mitigation, perfect trend following, because price is coming down, coming up, coming down, coming up, coming down, coming up. This was the pullback of the downtrend, right? Pullback of the downtrend. But this pullback could have confused you because it was a change of character on the 15-minute chart. Meaning this pullback could easily confuse you, because you could have think that, okay, this is maybe a 15-minute change of character after the daily demand tap. No, it's just a pullback of the overall trend. And if this pullback that happens after a demand tap can break above the less recent valuable supply zone, then it will be really confirmed as a pullback. Because as you can see, price couldn't break above the supply zone. Price will just react on this supply zone. And after a reaction, it just reverses immediately to downside. Huge V-shaped recovery. So price is coming down, coming up, creating the pullback, tapping into a supply zone, creating a pullback, tapping into a supply zone. After this, tap of the supply, 50% mitigation of the supply zone. After the 50% mitigation, immediate reversal, and continuation of the overall trend. Meaning this low point right here will be weak. Why would it be weak? Because it couldn't break above the less recent strong high point. Sorry for the cups. My throat is just dry. So this will be weak. This is a weak low point. This is a weak low point because it couldn't break above the less recent 4-hour zone, right? It's all about validation. Like, again, it's all about how you value your zones, because this zone is a daily zone. Just compare the zones. Daily zone, demand is a daily zone. Supply, this supply is a 4-hour zone. And if a daily zone can't even break above a 4-hour zone, then which one will be stronger? 4-hour zone, because a daily, which is much bigger than a 4-hour time frame, couldn't break above a 4-hour zone. So which will be stronger? 4-hour. So which trend is in control once again? The exact same trend that has been followed over and over again, the bearish. So the bearish trend is being followed. But just take a look at this reaction. Just take a look. Tap of the supply zone, immediate reversal. This is a sign of the weakness for the bullish trend. This is a sign for the weakness of the bullish trend. Okay. So what can we see after this? There was a huge reaction, right? There was a reversal, and New York has opened here. Here was a New York open point. What can we see after this? There could have been one more chance for the prove that the bullish trend is stronger than the bearish trend, there could have been one more chance that prices just reacted on the character changing zone. This was a character changing zone that has created this huge inefficient movement to the upside, right? There was liquidity below it. Here was liquidity built up for this zone. So there could have been one more chance if price could have reacted on this zone. And this zone could have give us a reaction. Sorry, I keep switching time frames. Oh my God. Sorry, I'm not in my best shape right now. So replay once again. Okay, so this zone could have given us a reaction that could have been lead to break of structure here and the break of this overall supply zone. Then we could have expect the continuation of the bullish trend. But this demand zone, this character changing demand zone right here, which was a character changing demand zone, couldn't even give enough reaction to break above this high point. Instead of breaking above this high point, it has just reacted on supply zone somewhere around here. There was a supply reaction. There was a extreme supply reaction. This was an extreme supply reaction presented by this candle. So once again, there was a second sign or third sign for the weakness of the bull trend, right? This demand zone couldn't give enough reaction to break above the last recent high point. Instead of breaking above the last recent high point, it just stepped into the character changing supply zone here, because this supply zone has changed character here to the downside. That's what this was the last recent low point, and this was the second last recent. It has double change character or even triple change character. And this movement after so we have two character changing supplies and demands, right? Character changing demand, character changing supply. This demand zone change character here, this supply zone change character here and here. So this demand zone wasn't strong enough to break above the character changing supply zone, meaning supply will be fully in control. Fractal confirmations are happening because supply tap, confirmation that the higher time frame supply is still in control. After this, price change character of 15-minute chart. Confirmation that the 15-minute has took over control partly. There still need a confirmation for the 1-minute fractal that if price, after a change of character to the downside, can tap into this 15-minute supply zone and can change character on 1-minute chart, then there will be a fractal confirmation, because 4-hour has been proven to be its bearish. 15-minute has been proven to be its bearish. 1-minute, if the 1-minute proves to be its bearish, then the fractal confirmation happens and we can expect the continuation of the bear trend. Right? It's simple as this. It's as simple as this, literally. But this was a double-edged knife, because there was still a 15-minute change of character, and there could have been still a chance for the continuation of the bull trend, because prices also gave a reaction on this demand zone too. There was a V-shape on this demand zone too. V-shape on the supply, V-shape on the demand. So there could have been still one more chance for the continuation of the bullish trend if price can react on this character changing zone, because on the 5-minute chart, this demand zone has changed character. As you can see, this demand zone right here has changed character, and this demand zone, sorry, actually this demand zone has changed character. It has flipped the last recent supply. There was a really valuable supply zone, and this demand zone could have flipped the supply. Reaction coming up after a demand tap, reaction on the supply zone, and flip of the supply. Flip has happened from this demand zone down here. I refined it on the 1-minute chart because there was clear liquidity for this demand zone. So that's why I said it was a double-edged knife, but the sells seems to be stronger. All of the sells, all of the bearish trend, all of the bearish pressures and signs seem to be stronger than the bullish. But I still tried both of the sides of the market, because on both of the sides, there was my edge. On the bullish side and on the bearish side, my edge has been presented. So switching to the 1-minute chart. Is this higher time frame understandable? Can I switch to the 1-minute? Okay, thank you. Mainly when I'm asking you a question, I'm also drinking. That's why I'm asking so many questions. So please remove the drawing. If you draw on the screen, just remove it. Okay? If you don't remove it, I will kick you. Thank you. So, double-edged knife. I've already broken down the higher time frame. We know the higher time frame perspective, that what could happen and what could have happened. Okay. What can we see here? Here was the flip zone that I was talking about on the 5-minute chart. This 1-minute zone is the refinement of the 5-minute zone here. This flip zone, this 1-minute flip zone, has flipped the 5-minute zone. And you asked that, why did I open this position? Why did I enter in a long trade? Because we usually wait for higher time frame taps, right? This is a higher time frame. This was a higher time frame zone. refined on a 1 minute chart. And this exact same scenario has been explained in the cancellations webinar. I said in the cancellations webinar that if price can flip a 5 minute zone and there's a good amount of liquidity for the 1 minute zone that has flipped the 5 minute zone, this is the most important part of this cancellation. But I've already explained this several times in the cancellations webinar even, that if price can create a good amount of liquidity for the 1 minute zone that has flipped the 5 minute zone, I will enter in that trade. If there won't be liquidity for that zone, then I will wait for a 1 minute confirmation based on the 5 minute zone and not on the refinement. But if there's a liquidity for the refinement of the zone, I'm entering in a trade. I'm asking you once again, guys, that watch that webinar 5 times in a row, because you still can't understand the cancellations. But in that video, the cancellations video, I've broke down this exact same example too. So please just watch that video 100 times. I don't know how many times will it take to understand, but you still don't understand. And please just watch it. It's in front of you. It's achievable for you. It's there. Watch it. Thank you. So I took this trade because the mentioned reasons. So prices flipped the 5 minute zone. That was the criteria, flip the 5 minute zone with nice inefficient movement after the demand reaction, right? So there was a demand reaction below it here that I was talking about. Prices coming from a demand zone that has created a change of character on the higher time frame. And after this, prices just mitigated the zone. I did set a 3 pip stop loss on the 50% of this candle, because you know why we use a 50%. So there was a 50% entry for me with a 3 pip stop loss, because I wanted to keep myself in the trade in case the possible liquidity sweep happens again. Because first, when I was entering, I did set a 2 pip stop loss. But when price gave a reaction here, tagged me in, gave a reaction, and couldn't break above the last high point, I was aware of the liquidity sweep. So there was liquidity inside of the zone too. So if the liquidity would have been swept, the 3 pip stop loss could keep me in. The 2 pip stop loss couldn't do the same. As you can see, the 2 pip wasn't strong enough to hold me in the sweep. The 2 pip stop loss was part of the sweep. The 3 pip wasn't part of the sweep. That's why I set a 3 pip stop loss right here. That was a 3 pip stop loss for me. And after this, price I just swept the mentioned liquidity. There was a sweep of this liquidity and reversed to the upside. But here comes the interesting part again. It's just the exact same scenario that I was talking about in the last recent recap video. It's the exact same double-sided hedge position, or I don't know how to call it. I don't like to call it hedging. It was just a double-sided position because the criteria has been shown up on both of the sides, right? So as soon as I saw the break of this high point, I did set my stop loss to break even. But on the other hand, I had a limit order on the 50% of this candle. Why did I have a limit order on the 50% of this candle? Because there was a supply reaction. Here was a supply reaction, the extreme supply, right? There was the extreme supply zone that price has just reacted on aggressively. It was a V-shaped recovery, V-shaped aggressive reaction on the extreme supply zone here. After this, price has just presented a flip zone. Here was the last recent demand zone. Price has mitigated the last recent demand zone that has caused the last recent 1 minute pressure to the upside, 1 minute breakout structure here to the upside. This was the 1 minute breakout structure, the last recent, and this demand zone has broken over the last recent structural high point. And after this, after a supply reaction here, price just reversed to the downside and mitigated this demand zone and flipped this demand zone, because coming down, coming up, here was the actual reaction of this demand zone and flipping this demand zone and creating strong change of character. That's all. I don't know.
Marcel.
Please don't interrupt me. If you'd like to ask a question, just raise your hand.
Yeah, I want to know about the supply, man.
I said, don't interrupt me, please. If you'd like to ask a question, raise your hand. So here's the flip zone, right? Let's just flip this demand zone perfectly. And yeah, back. If you'd like to ask a question when I'm speaking, don't interrupt me. Don't use your microphone. You can use your microphone when I'm asking you to use your microphone. But if I'm speaking, don't use your microphone, because it actually fucks my mind up. I lose my thoughts. I don't know where I was, and it just annoys me. I lose the actual thoughts that are in my mind. So yeah, if you got a question, raise your hand. There's a hand raising option on Zoom. If you got a question, press it, hand raised. And when I'm done with my speak, I will ask you that what's your question. So yeah, thank you. Okay. So price has flipped this demand zone, created a first change of character and flip zone right here on this line. So it was a flip and change of character and created a strong change of character here to the downside, right? So this was a strong change of character line presented by this supply zone with a huge inefficient push, right? But before this, after this movement, there was a liquidity formation for the demand zone. That's why I opened the demand zone too. And that's why I opened this supply zone, because there was a liquidity formation for this supply zone too. First tap, second tap. Perfect liquidity for this one, perfect liquidity for this one. If I'm opening this demand trade and it runs to break even, for example, it runs to break even, breaks this high point, and it tags me in this supply trade, and it sweeps me out this supply trade because, let's see, demand is in control and it wants to break higher, then I will take a loss on this trade. But this trade will run, for example, in like lacked profit. I will lock in one minimum restore ratio for my favor to actually fix that profit that I just lost on this supply trade. But if this hits stop loss, I believe this will run. If this hits stop loss, the demand trade, then the supply will more likely run. But these are riskier positions than just opening one position, right? I've only opened this position because this was the perfect criteria on both of the sides. Perfect criteria, because here was a demand tap, higher time frame demand tap. After mitigating a higher time frame demand, price just flipped the higher time frame supply. After a supply flip, price just mitigated a supply, and from that coming supply, from that coming higher time frame supply, price flipped the demand zone with the supply. So basically, both of the main criteria have shown up on both of the sides, right? Not both of the criteria, I meant all of the criteria have shown up on both of the sides, because there was the same criteria in the long side, there was the same criteria in the short side. Exact same criteria with liquidity, with flips, with higher time frame tests, with cancellations. Exact same criteria has happened on both of the sides. That's why I took the double-sided trade. And as you can see, the shorts have played out perfectly. Why? Why did it have a higher chance? Because, okay, I'm asking you, why? If you'd like to answer the question, just raise your hand and I will ask you to answer it. Why did the shorts play out? Why was the shorts stronger than the longs? Why do those have a higher chance to work out? Why were the shorts higher probability setups than the longs? So raise your hand if you'd like to answer this question. No one? Okay, then I would say main trend. Higher time frame structure, exactly. Main trend. The main trend is the reason, because the main trend is extremely bearish on every single time frame, and the fractal confirmation for the main supply trend, for the main bearish trend, has just happened. That's why the shorts had higher probability to actually play out. So this was the perfect entry opportunity. Basically, this was the perfect extreme entry opportunity. Liquidity for the zone, flip of the overall demand zone right here, strong change of character, liquidity for the short. And after this, price just tagged me in, almost swept me out from the trade here, as you can see, but it still kept me in the trade because I worked with zero spreads, as you know. So I was still in the trade, perfectly running. And after this, price just created a breakout structure here to the downside. So as soon as this movement happened, I did this trade did hit stop loss, not stop loss, but break even. This is a break even trade, because as soon as this high point has been broken, I did set my stop loss to break even on this long trade. So break even on this long trade, break even running on this short trade. So I did hit break even here, and this trade was running in break even. After this, I was so confident about the shorts because prices created a liquidity line here. As you can see, created liquidity line for the upcoming shorts. Second question that you were asking, why didn't I TP the position on this demand zone? Simple, I just explained it. This was the 15-minute demand zone. This was 1 15-minute demand zone here, as you can see, which was weak. This demand zone was weak. Why was it weak? Because it couldn't break above the last recent supply zone. It couldn't even break above a high point right here. So this demand zone was weak, meaning if it's weak, it won't give us a reaction. We are following the main trend, and we are not TPing our main trend trade on weak zones. We are actually holding our positions to strong zones. And this was a weak zone. This couldn't have any impact on price because this couldn't even take a supply out. So meaning it won't be a demand zone. This liquidity was built up for the upcoming short. After this, price just mitigated this demand zone. There was a reaction on this demand zone. And I did set another limit entry on the 75% of this zone. I did a limit entry on this zone, which have been missed by a few pips, as you can see. If this trade would have tagged me in, then that would have mean another 18 risk reward ratio, but it was a skip for me. As you can see, it didn't tag me in. It's perfectly fine. My trade was running well. This trade was running well. The reason I did open this limit, did place that limit, I was just explained. This supply zone here has swapped liquidity. It has tapped into a weak demand zone, which will be proven to be weak. As I said, it will be weak, so it can't really give a reaction for me. And if it would have given a reaction, and for example, would have break over this supply zone, that would be still fine for me because my stop loss was here. At this point, 3 risk reward ratio were lagged in. And if this trade hits stop loss for me, then I still book 2 risk reward ratio at this line. 2 risk ratio and profit. So I would have perfectly risked it. I wasn't even care if it would have hit stop loss. It was perfectly fine for me. But the other sign for the good part for this supply zone is the price was coming up slowly. Slow corrective movements to the upside, as you can see. All of the shorts are impulsive, high impact movements. All of the shorts are impulsive, as you can see. This correction was slow. Correction, slow. Correction, slow. So I was pretty sure that this trade will be good. But if it was a miss for me, fine. After this, price was just running perfectly straight to my TP. The last recent 15-minute strong point was my TP. This was the last recent strong point, as you can see. Basically, this low point was the origin of the whole character changing movement to the upside. So I was TPing a strong low point. This was my TP, my overall target point. After this, price has just mitigated the extreme right here, 1 minute extreme zone right here. As you can see, here was a mitigation of this extreme zone. And also the 50% of this 15-minute demand zone was still has been left unmitigated. But after the mitigation of this 1 minute demand zone right here, price will just react on it. And after this, it just flipped the overall 1 minute demand zone and flipped the overall 15-minute demand zone without even reacting on the 50% of this demand. Right? Perfect body closure flip, even on the 5-minute chart too. This was my second position. I did open a limit order on the extreme of this zone. There was even a liquidity creation for this zone, as you can see. There was liquidity point, or you can relatively call this as liquidity point or this as liquidity point. There was a small amount of liquidity built up for this zone. It was a tag for me, 50% entry tag. And this trade was 1-to-6 risk reward ratio down to this demand zone. Yeah, nothing to say more about this because price just broke structure here to the downside. This trade was running in break even. And if this trade would have hit stop loss, that would be still fine for me because my stop loss was still here or here. I don't really remember how did I manage this trade. It was here, so profit was booked. If price would have reacted on this supply zone, for example, my stop loss, original stop loss would have been still untouched and it would have run to my favor once again. So it was a perfect scaling position for me because this zone has flipped the demand zone, higher time frame demand zone, a smaller time frame demand zone, swap liquidity from this region too. As you can see, it literally swapped the triple bottom, first bottom, second bottom, third bottom, swap the liquidity, higher time frames flip, lower time frame flip. Basically, every single needed criteria there was for a continuation, even liquidity creation. So yeah, that's why I opened this position too. And overall, these two positions, first one did hit more than 24. Second is a bit less than 6 risk reward ratio. So overall, it was a 30 risk reward ratio day for me, which is pretty fucking good. It was a really, really good day for me. So yeah, I hope this recap makes sense and you could have understand the actual thought process behind the trades and why did I choose both of the longs and shorts at the same time. And right now, Joseph, you can ask your question.
Yeah, Marcel, sorry for the interrupt, man.
No problem.
Okay.
No problem.
Can you mark the extreme supply?
You mean the higher time frame?
Yeah, this supply. You told that there was a supply in there.
Right? Okay. I can't hear you.
And show me in 5-minute or in 50-minute.
Sorry? I showed you the
Show
on
me
the
in
15-minute. Here was.
Yeah.
Here's the overall extreme. Basically, according to the plan, the week would have been the best entry opportunity, but price is just reacting on the full candle, right? Reacting on the full candle and extreme V-shape recovery, presented on the full candle that has caused the change of character basically to the downside. And this was a flip zone too because price was coming up. this candle is immediately reacting on the last recent demand zone. On the 1 minute chart, this was a flip scenario. Then after the reaction on this candle, price just couldn't break structure to the upside again. This candle couldn't break the last recent candle's high point, only with wick.
You took this
So-
one as a supply.
After this, price has just created the overall supply zone that has caused the inefficiency. So from this candle, the inefficiency has started here. And yeah, I was expecting the tap of the wick zone because according to our plan, that's the right zone. But price has just presented the reaction on the full body and the huge reaction. So why wouldn't I go with the flow?
Yeah, now we understood. Can you show me the 4-hour supply? Because there is no imbalance, but you took that as a supply.
Yeah, there's no imbalance on the 4 hour, but on the 50-minute there is,
Imbalance.
and it's still a 4 hour supply zone.
But how?
Because it created a break of structure to the downside, and it created a flip zone too. It just reacted on this demand zone, reaction on this low point, reaction on this demand zone, reaction, flip of the demand zone.
The breaking of demand will lead to supply.
Okay, yeah, of course it leads to supply. We have to move on. So, okay, guys, just quickly reading the chat because the session starts in 20 minutes and I have to break down the higher time frame too. I skipped the short because the 50 was it wrong? According to your plan, nothing can be wrong and nothing can be right. I can't tell you if it was wrong or right. It's your own plan, not my plan. Marcel, don't you need that inefficiency for the zone because the supply didn't have inefficiency? Which one?
First supply with your first short entry.
Here?
Yes.
Basically, it has been mitigated, but as I explained it in the backtesting webinar, the last backtesting webinar, or the recap video, I don't know, it was explained few days ago, there was liquidity inside of this zone, meaning the zone will be valid. If there's liquidity inside of this zone, inside of the 1 minute zone, then you can take that zone the 50% entry. It has been literally explained in the last recent webinar.
Okay, thank you.
Yeah, chilling markets. There was liquidity. Yeah. Exactly. Can you draw on the higher time frame supply at the top? Okay, mate. Yeah. Okay, guys, move on. So this was a trade. I mean, trades pretty fucking good for 1 day. Switching to the 4 hour chart, breaking down the higher time frame chart pretty quickly. Breaking down what can we see here? Okay, just deleting everything. Yeah, man, I can clearly see it. Yeah, that was a supply flip. Reaction on this demand zone, reactional candle, flip of the demand zone, break of the overall higher time frame structure right here, and change of the overall high time frame structure right here. If a demand breaks, there will be a supply zone. That's basically in the first video of the video course. I love it when you hear. Okay, guys. So 4 hour zone, 4 hour chart, breakdown, forecast. Let's begin because we almost blew the whole time with the recap video. So 4 hour zone. What can we see? Literally, nothing has changed on the 4 hour zone than in yesterday's markup, right? Basically, the whole situation is like in yesterday. Price is reacting on the supply zone, and I just broke down what has happened here on the supply zone. Price has just reversed on the supply zone. The situation is exactly the same that has happened yesterday. So the 4 hour doesn't really need another breakdown because I've already broke it down in yesterday's markup. So yeah, let's just switch to the 15-minute chart because that will be much more interesting for us. Okay, what can we see here? Oh my God, I'm literally stupid. Of course, the situation is the same because it was in replay. Okay, I'm just stupid as fuck. Okay, yeah, I have replay mode on. Jesus fucking Christ. Okay, so no, this situation is not the same. Let's just break it down. 4 hour zone, 4 hour chart. What has happened? Here was the demand mitigation, the overall extreme daily demand mitigation, right? Right. After this, the broken down things has happened where price is reacting on that 4 hour supply zone, give a reaction. But here comes the interesting part. This zone, this 4-hour zone, couldn't give a reaction, couldn't give strong. Please, guys, just calm down, stop laughing, and focus on this because it's important. So this zone has gave a reaction for us, and this reaction wasn't strong enough to actually create another breakout structure here to the downside. So this supply zone was weak. This 4-hour supply zone was weak because it couldn't break below the last recent low point. There was no breakout structure. Here was no breakout structure, meaning this supply zone will be weak, and meaning this will be liquidity for some upper supply region, right? So the liquidity has been created here. Here was perfect liquidity line built up for this supply zone up here. This is the last recent supply zone above this supply zone, right? This is the last recent supply above this one. And we always mark the last recent supplies out. So if there's liquidity inside of this supply zone and there's liquidity formed inside of this supply zone, what can we expect from price? We can expect the sweep of this liquidity and expect the tap of this overall supply zone that's above or less recent supply and above the liquidity, right? This is what we can expect. What has happened? Price couldn't break above the last recent low point. There was no breakout structure. No breakout structure. After a no breakout structure, price has created an actual change of character here to the upside and liquidity sweeping movement. But it has only happened with weak. So we can't really decide if it's a liquidity sweeping movement or a change of character because it has happened with the week. So according to our plan, this movement, this weak movement was only a sweeping movement of this liquidity line right here. And the supply has been left unmitigated. But if we take a look at the past price action areas, price doesn't really like to mitigate the supply zones. If there's liquidity, price doesn't really like to mitigate the supply zones, the 4-hour supply zones. I will find you several examples for this one. Like here too, after a liquidity sweeping movement, here price didn't mitigate the supply zone and just reversed the downside immediately and created a breakout structure. And there will be several more examples for this. Like here too, liquidity, here's liquidity, sweep of the liquidity, no supply mitigation, no supply mitigation. So prices just keep following this pattern. And price was really close to this actual supply zone. It was really, really close to this supply zone, but swept the liquidity. And the liquidity sweep seems like it was strong enough to reverse price to the downside again. So what can we expect here? We can expect two things. If price can tap this demand zone, if price can tap this demand zone and create a change of character on this demand zone, on the 15-minute chart, of course, because this is a 4-hour zone. And then after this, price will have a chance to tap this supply zone up here. And after a supply tap, we will have a chance to see the continuation of the bear trend. The second scenario is price. Actually, it was strong enough, this liquidity sweep was strong enough to reverse price, and this demand zone will be proven to be weak. And if this demand zone will be proven to be weak, then we'll be able to take a continuation scenario based on the flip of this demand zone down to the weekly low point. I will target this weekly low point because this is the last recent weekly breakout structure line. I've already broken down it in several webinars, so just check those webinars. So basically, these are the expectations for the 4-hour chart. Nothing more. This is all what we can see on the 4-hour chart. But we still have one more scenario, is if price taps this demand zone, creates a change of character here, taps this supply zone, and the supply zone can give a reaction. There will be a flip zone and continuation to the upside to the next recent supply zone, which is this one, right? Basic same scenarios every single week, basic same scenarios on every single session. Literally, there are two possible scenarios that could happen on the zone. Two scenarios. What are those scenarios? Flip of the zone or change of character on that zone. Reversal or continuation. This is all the scenarios that could happen on a single zone. So yeah, easy reaction based. Once again, it's all about how you react on this zone. What can you see on these zones and what confirmation the zones gives you. And of course, considering the main trend, you have to consider the main trend. You have to consider what price is actually doing in a structural perspective. Yeah, that's all about the 4-hour chart. Let's see the 15-minute chart. So as you remember, this is the 4-hour zone up here. Here was a liquidity sweeping movement of the actual liquidity. Now let's see if this zone has created more liquidity. No, this movement. So this movement didn't create more liquidity on the upside. So we basically can consider this as liquidity. But here's a supply mitigation. Price has mitigated the supply here, as you can see. Supply mitigation. And this was the extreme 15-minute supply, right? Liquidity below this supply zone, huge liquidity, huge liquidity, huge liquidity, huge liquidity. This was literally perfect. First tap, second tap, third tap, fourth tap, fifth tap. Look at this liquidity line. Sorry, can't draw straight line. Look at this liquidity line. All sitting below the extreme 15-minute zone. So this extreme 15-minute zone has give us a reaction, and basically the scenarios will be the same as on the 4-hour chart. Nothing will change. Nothing will change because if price can tap into this zone, this refined 4-hour zone, I mean, let me just refine it before I call it a refined zone. So if price can tap into this zone, and I believe the 15-minute zone perfectly matches with the 50%. Yeah, the 50-minute zone is almost at the 50% of this zone. So if price can tap the 50% of this zone or the 50-minute zone inside of this 4-hour zone and can give a reaction for us on the 15-minute chart, there will be a change of character because inside of the 4-hour zone, we need a 15-minute change of character. So if this confirmation can happen, then we can aim for this upper supply zone. After this upper supply zone, if price can flip this zone, we will aim for the next supply zone here. If this flip scenario can't happen and price will create a change of character here on the 4-hour chart once again, because this is the 4-hour zone, sorry, not on the 15-minute chart, because this is the 4-hour zone, then we'll be able to enter in a short trade targeting deeper price action areas. As I said, maybe the extreme low, maybe the 50% of the daily zone, or maybe the weekly low point. If price breaks below this demand zone, then it means that this liquidity sweeping movement was strong enough to actually reverse price. And if this break happens, then we'll be able to take a continuation down to the deeper price action areas. Fourth scenario is if price reverses here to the upside to the supply zone and creates a change of character, then the same scenario will be live as on the first scenario, that if price creates a change of character continuation, if it creates a flip, continuation to the upside, blah, 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 blah. So yeah, these are the scenarios on the 15-minute chart. Basically, there's nothing more to say about this because this is all we can see. We adapt and we react on the less recent price action in the region. And this is the less recent price action in the region. We don't care about this shit. We don't care about this shit. We don't care about this shit. This is all, there are lots of unmitigated supply zones over and over and over and over again everywhere. But we care about the only less recent structural and price actional region, which is this one. And we mark these zones out here. If this zone can't hold, then we'll mark out another zone, which will be somewhere around here, or maybe on the 1-minute chart. So if this zone can't hold, we mark out the next zone. If this zone breaks, then we will have a next target point. If the next zone breaks, then we will have a next target point somewhere around here. And this goes on and on and on and on and on again and again. We only care about the less recent zones. But on the 15-minute chart, we can still mark out zones. After the supply reaction, as you can see, this was the less recent demand zone that has caused the less recent breakout structure here to the upside. Price has split this zone. The flip has happened, basically, I would say, from this movement. Here, this has caused the less recent flip. Here to the downside because it has closed below with body closure. This is only closed below with wick closure. But this could be liquidity. We will see it in the lower time frames if it's liquidity or not. Sorry. So yeah, it has been formed in lunchtime area and this not. So maybe we will be able to find a 5-minute zone inside of this structural movement here, and there will be liquidity below it. So maybe this will be a good entry opportunity for us because price will react on that zone, create a change of character here for us. Then we'll be able to take a continuation, short continuation down to this demand zone. That's all about the 15-minute. Sorry for rushing, but the session will be opened in 8 minutes, and I just want to be real quick. So yeah, 5-minute chart. Here's the last recent demand zone. As you can see, there was a reaction on those demand zone. Nobody closure on the 5-minute chart either. And the flip has happened from this supply zone here. Okay. Is there any supply zone on the 5-minute chart that we can refine this zone? No, there isn't. But I will just refine it quickly on the 1-minute chart. And on the 1-minute chart, we can actually refine one. No, 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 no. Yes. On the 1-minute chart, we can refine it for this zone. Okay. But this zone has been relatively tapped, or not even tapped, but almost tapped, and liquidity has been swept. So I will just delete this. I will just delete this zone and switch to the 5-minute zone. So here's this last recent zone. This is the lunchtime area, right? But we can still expect a reaction on lunchtime areas. If price can give us a reaction on the lunchtime area zone, and give us a confirmation on the lunchtime area zone on the 1 minute chart, then we can use the lunchtime area zone as confirmation zone and we can still enter on it. We can see direct limit orders on the lunchtime area zones that we all know about the lunchtime area zones, right? We can wait for confirmation. We can set direct limit orders. So basically, that's all we can see on the 5 minute chart, or even that there's more liquidity. We can call this whole line as a liquidity. And maybe there will be a 1 minute zone below the liquidity. Even the extreme has been indicated, or the real extreme could be the latest zone above the liquidity. But right now, I will just keep sticking with this 5 minute or /50 minute zone. If this will be able to give us a reaction, then I enter on this zone. If this can give us a reaction, then I wait for higher supply areas. That's all. That's all. I'm always marking out the less recent zones. So once again, if this zone can give us a reaction, I'll be entering a trade, targeting this demand zone down here. If it can give us a reaction, I will maybe take a flip zone, long opportunity after the extreme zone. And if the extreme zone can give us a reaction, I will enter on that extreme demand supply zone and target this same zone. And just combine the overall scenarios on both of the time frames. There was a scenario for the 4 hour, there was a scenario for the 15 minute, there was a scenario for the 5 minute. Combine all of these scenarios together and adapt on these zones. If one of these zones will be tapped, remember for the scenarios. If one of these zone gives a reaction, remember for the scenarios. If one of the zone breaks, remember for the scenarios, and react and adapt on these zones that I'm just showing you. So yeah, the best opportunity in this session that could possibly happen will be if price taps this demand zone, gives a reaction on this demand zone, continues up to this supply zone, this supply gives a reaction, and the overall continuation will happen to the downside. So that will be the best forecast, that will be the best possible scenario that could happen on this week. And maybe this will happen. I'm pretty positive about this scenario, or even without tapping into this higher supply time. So tapping into this higher supply, there's still a chance that price will tap this demand, there will be no reaction, and there will be a continuation to the downside. So these are the most probable scenarios for me and for price in this session. So yeah, that's it, guys. Sorry for rushing, but you know, the session opens in 3 minutes.
Marcel,
Yes.
Marcel, the price was currently at the 5 minute demand. Can we look for some long?
Sorry?
Because there was liquidity was sitting.
Sorry, I can't understand.
The price was at currently 5 minute demand. Can you see that?
Okay, and?
Yeah, can we look for some long?
No. Price is coming from a supply zone, literally breaking structures and breaking below demand zones over and over again. Coming from a supply zone, the trend is extremely bearish. Can you take a demand trade? No, you can. It will be risky. But once again, it's about your own criteria. If it's safe for you, then take that demand trade. If it isn't safe for you, then skip the demand trade. I'm just showing you the perspective on the higher time frames. Yeah, they're even using 30 minutes. So I will send the markup updates after the news. Okay, guys. And I will send the zones for you now. Just the quick 50-minute and 5-minute outlook. And after the 50-minute and 5-minute outlook, I will send you the updates after the news have been released. Okay, guys. Yeah, that's it for today. Feedback will be appreciated about this session. As usual, you know, in the feedback Discord channel. I believe it was a fire session once again. So yeah, that's it, guys. We'll send you the markup updates. We'll send you everything. Take care and smash this session. And remember for the code. Remember for the code at the beginning of the session. Think about the tree. Think about the fruit. That's it. And take care of the tree. And don't focus on the fruit. That's all, guys. So yeah, love you once again. Take care. Wish you a beautiful session.
Thank you for being here, guys. Wish you a beautiful session.